back on August 11, when Bitcoin was still trading just above $10,000, publicly traded business intelligence firm MicroStrategy (MSTR) made a transformational announcement. The company said that it has purchased 21,454 Bitcoins at an aggregate purchase price of $250 million, a purchase made pursuant to the two-pronged capital allocation strategy, which, in addition to repurchasing $250 million of its stock in the open market, also called for investing up to $250 million in one or more alternative investments or assets. In doing so, MSTR became the first publicly traded company to convert a substantial portion of its cash holdings to Bitcoin. Our investment in Bitcoin is part of our new capital allocation strategy, which seeks to maximize long-term value for our shareholders, said MSTR CEO Michael Saylor. This investment reflects our belief that Bitcoin, as the world's most widely adopted cryptocurrency, is a dependable store of value and an attractive investment asset with more long-term appreciation potential than holding cash. Since its inception over a decade ago, Bitcoin has emerged as a significant addition to the global financial system, with characteristics that are useful to both individuals and institutions. MicroStrategy has recognized Bitcoin as a legitimate investment asset that can be superior to cash and accordingly has made Bitcoin the principal holding in its Treasury Reserve strategy. Saylor continued, MicroStrategy spent months deliberating to determine our capital allocation strategy. Our decision to invest in Bitcoin at this time was driven in part by a confluence of macro factors affecting the economic and business landscape that we believe is creating long-term risks for our corporate treasury program, risks that should be addressed proactively. Those macro factors include, among other things, the economic and public health crisis precipitated by COVID-19, unprecedented government financial stimulus measures including quantitative easing adopted around the world, and global political and economic uncertainty. We believe that, together, these and other factors may well have a significant depreciating effect on the long-term real value of fiat currencies and many other conventional asset types, including many of the assets traditionally held as part of corporate treasury operations. With this announcement, Saylor unleashed two things: a frenzy of public companies, including financial advisors such as the venerable, 169-year-old Mass Mutual, converting some, or more than just some, of their cash equivalents into Bitcoin, and even issuing stock buybacks instead opting to purchase Bitcoin with their excess cash. More importantly, Saylor has successfully unlocked tremendous value for shareholders, with MSTR stock price exploding alongside the record surge in Bitcoin which has nearly quadrupled since August. As has the market cap of MicroStrategy, which went from a valuation of $1.25 billion in August to a record $5 billion currently. MSTR is up 37% already in the first week of 2021 alone. Having seen its Bitcoin cash conversion strategy validated and generously rewarded, Saylor and MicroStrategy proceeded to buy more Bitcoin, much more. According to Michael Saylor's latest update, as of December 21, MicroStrategy owned a whopping $1.125 billion worth of Bitcoin, an aggregate of 70,470 Bitcoins purchased for $1.125 billion at an average price of $15,964 per Bitcoin, after purchasing roughly 30,000 Bitcoins for $650 million with all the proceeds from a recent convertible bond offering. Incidentally, following the tremendous surge in Bitcoin's price in just the past few weeks, the value of MSTR's Bitcoin holdings is now over $2 billion. To be sure, Saylor's approach, one where companies issue debt and use the proceeds not to repurchase stock but buy Bitcoin, has been quickly catching on. Most recently, Malaysia's GreenPro Capital soared 130% in minutes after the investment company said it intends to start a Bitcoin fund, just as we said it would when we tweeted back in November that the new, cool, thing is for companies to convert their cash into Bitcoin. This strategy had the added benefit of implicitly creating a Ponzi-like reinvestment structure, whereby new cash, which is generously sloshing around thanks to the central bank's continued injection of $1.3 billion in liquidity every hour, is used to purchase more Bitcoin, lifting the price, making Bitcoin even more attractive to other investors, who repeat this strategy, pushing the price even higher and so on. Yes, one day the success of this strategy will come to an end, but not before central banks start tapering their QE, which, as we noted last week, won't happen until 2022 at the earliest. And now, a new benefit has emerged as a result of MicroStrategy's novel business strategy. With MSTR having gradually pivoted away from its legacy business model to become what is essentially a publicly traded Bitcoin investment pool, the company has become a de facto Bitcoin proxy, cash flow positive at that, for all those investment managers who are limited in their exposure to Bitcoin. As a reminder, one of the reasons why the Grayscale Bitcoin Trust, GBTC, has not only exploded in recent months, but is also trading at a huge premium to NAV, is that many institutional investors are only allowed or prefer to invest in Bitcoin in fund format, not in Bitcoin itself or in Bitcoin futures, for regulatory or other reasons. In fact, as JPM explains, many of them are not even allowed to hold restricted shares of the Grayscale Bitcoin Trust via private placements given the 6-month lockup period, and are thus forced to pay a premium by buying these shares in the secondary market. But what if they can effectively have exposure to Bitcoin without spending up to 15 to 20% for a premium, which amounts to $4,000 per Bitcoin as of this moment? That could disappear at a moment's notice. That's precisely what Morgan Stanley's investment management arm has done by not buying GBTC, but by investing directly into the Bitcoin proxy that is MicroStrategy, and clearly happy with the company's pro-Bitcoin strategy, boosted its stake by a whopping 455% in the fourth quarter, from 142.9k shares to a record 792.6k, representing more than 10% of MSTR total outstanding shares. What explains Morgan Stanley's enthusiasm for MicroStrategy, which has emerged as the best publicly traded proxy for the world's best-performing asset? Simple. As CoinDesk notes, Morgan Stanley views its investment as a way to benefit from Bitcoin's historic run without actually being a hodler. More importantly, MSTR is now seen as an acceptable, to regulators and shareholders, way to access the Bitcoin space without having to buy the actual tokens or spending as much as 40% in Grayscale premium. Indeed, the implications are groundbreaking, because not only does this approach obviate the need for Bitcoin ETFs, after all, with MicroStrategy's success there will be dozens if not hundreds of copycat publicly traded, shell, companies that will quickly convert all of their cash into Bitcoin to become attractive investment allocation vehicles for big asset managers, opening up an even greater portion of the market to companies who have wanted to invest in Bitcoin but were unable to do so. But it also allows companies to buy crypto effectively at market without paying a substantial NAV premium to a trust which, due to its monopoly presence, could extract a pound of flesh from all institutional investors who wanted Bitcoin exposure. What this means is that not only will MSTR now scramble to get access to even more cash, expect many more convertible and bond offerings, and quickly convert it into Bitcoin, but countless other publicly traded firms will now rush to convert all their cash, and more, into Bitcoin, while abandoning existing operations in hopes of becoming Bitcoin investment pools and having their shares similarly snapped up by whale investors such as Morgan Stanley, First Trust, JP Morgan, AllianceBernstein, and all the other institutions which are currently long and adding to their MicroStrategy holdings. One such company which we are convinced will announce it is converting billions of its existing cash into Bitcoin, is none other than Tesla, whose CEO Elon Musk was urged by MSTR CEO Saylor to make a similar move with Tesla's money.
Elon Musk, the richest man in the world, just made his riskiest bet ever, linking Tesla's fortunes to Bitcoin. His car firm Tesla has said it bought about $1.5 billion of the cryptocurrency Bitcoin in January and expects to start accepting it as payment in the future. He removed the tweet days later but has continued talking up Bitcoin and other cryptocurrencies, including Dogecoin, which jumped 50% after his endorsement. Tesla plans to accept Bitcoin as payment for its products. Tesla is betting big on Bitcoin, saying it may soon accept the digital currency as payment for its cars. Tesla, the most valuable car company on the stock market, said it is now holding some of its cash in Bitcoin rather than traditional currency. In its annual filing with the Securities and Exchange Commission, Tesla said that it expects to begin accepting Bitcoin as a form of payment for our products in the near future, initially on a limited basis, which we may or may not liquidate upon receipt. In addition, Tesla said it had invested $1.5 billion in Bitcoin so far, as part of a decision to invest a portion of the company's cash in certain specified alternative reserve assets. Tesla lists $19 billion in cash and cash equivalents on its balance sheet as of December 31st. The announcement gives the cryptocurrency a fresh dose of legitimacy. The price of Bitcoin was up 12% in morning trading on the news. Shares of Tesla too were up 2% in early trading. Bitcoin is going to be the next Tesla-like bubble. The volume is coming from all the people who think that Elon can do no wrong. This is just emotion taking over now. Another 7,000 companies signed up for MicroStrategy's Bitcoin program. Tesla may be nothing compared to what's coming. Stocks are in a bubble, but Bitcoin is the mother of all bubbles. Bitcoin prices have doubled in less than a month to more than $40,000. It rose more than 20% in just the past 5 days. Some Bitcoin bulls argue that this stunning surge is justified, but many experts on Wall Street are warning that this won't end well. Bitcoin saw a dramatic rise during the past 2 years. A surge of roughly 1,000% since the beginning of 2019. Bitcoin topped $47,000 in Tesla-fueled rise. It was $9,000 at this time just last year. This is far greater than the gains for other assets that have enjoyed massive run-ups in the past few decades. That includes a surge in gold prices of more than 400% in the late 1970s, as well as other notable investing manias, Japanese stocks in the late 1980s, Thailand's stock market in the mid-1990s, dot-coms in the late 1990s, and housing prices in the mid-2000s. Those sectors all enjoyed triple-digit percentage gains before crashing down to earth. Bitcoin is not like stocks. It is almost like a roller coaster ride. If you're okay at high risk, go for it. If you can, wait for it to drop. Bitcoin is good for short-term investments. When you're lucky to invest in the right time, the coin price gets higher and higher. Bitcoin rally may be the mother of all bubbles. And the bubble continues to get bigger and bigger. When it'll pop, nobody knows. Please take a second to hit the like button, hit the subscribe button, and don't forget to also hit the notification bell. The Bitcoin community has different views of what the asset means. There is no unified vision within the community, but rather a set of different views for the long-term potential of the protocol. Some view it as the world's future money, while others view it as digital gold, a store of value, or a bank in cyberspace that will exist alongside sovereign-issued currencies. For example, Michael Saylor, the billionaire founder and CEO of MicroStrategy, MSTR, the first public company on a major U.S. stock exchange to invest corporate funds in Bitcoin as its treasury reserve asset, to the tune of hundreds of millions of dollars, has stated that he doesn't view Bitcoin as a currency, but rather as a digital savings bank. Bitcoin is not a currency, nor is it a payment network. It is a bank in cyberspace, run by incorruptible software, offering a global, affordable, simple, and secure savings account to billions of people that don't have the option or desire to run their own hedge fund. Michael Saylor. Others view Bitcoin as simply a casino gambling chip. Bitcoin has zero intrinsic value. After the collapse, society will not be recapitalized with Bitcoin. A Ponzi scheme is a form of fraud that lures investors and pays profits to earlier investors with funds from more recent investors. Yes, people are making money with Bitcoin. People made money on Enron too. It's okay to hold your Bitcoin and watch it grow, but one fact is, it might get lower, and you lose all. That's why you need to learn to trade. When this one pops, there won't be a lot of hiding places. Elon is now a pumper of an unscalable computer code trying to pass off as currency, hard asset, commodity, money, or whatever else the Bitcoin bulls label their digital illusion of wealth these days. They are gambling on people still jumping into the thing. Pure speculation and gambling against the currencies of our societies. Potentially destructive. The inflationary US dollar is more destructive. With $1.9 trillion on the way. How can people believe that Bitcoin will become the main currency when it's so volatile? Imagine going to the grocery shop with $100 worth of Bitcoin just to find out that it's dropped to $90 when you're at the cashier. A currency should indeed serve a society. There would not be a need for Bitcoin if we had a sound money system. Instead, all we hold is other people's liabilities. Pretty simple. Once governments create their own national e-currencies, Bitcoin will no longer be viable to anyone but the underground rackets. E-currency will be easier to audit and provide more control with less cost to the central banks and companies. Crypto will be ostracized, so give it time. I say within 5 years, Bitcoin has time to rise, but once global cash gets turned digital, it's going to be a game over for crypto. Governments are already trying to pull the rug on this. If Bitcoin creates billions or trillions in wealth, none of which is being taxed, wouldn't governments find a way to take a piece? They can't control Bitcoin itself, but they can control the thousands of companies who handle Bitcoin. What is to stop them from banning Bitcoin transactions? I believe China did this. At that point, it would just be black market sales. At some point, the IRS is going to want their share. I wouldn't think that they would allow billions or trillions to go untouched forever. It is tax evasion. Maybe when these Bitcoin baggers wake up tomorrow, they find themselves unable to sell any Bitcoin for money. Bitcoin crashes to zero, and all Bitcoin exchanges are down like Robinhood. Tulips, can't buy a sandwich with it, Ponzi, pumping, Musk manipulation, a bunch of numbers, etc. If 10 years ago the 1% that read up on Bitcoin had at least some faint idea, then today, unfortunately, nobody knows what Bitcoin is, what it isn't, and what it's all about. But everyone has an opinion. The more you listen or read about it, the more opinions you hear, and one is wilder than the other. Like there's a prize for the craziest analogy. Elon says it will be used to transact with. If the currency in your wallet could go up or down in US dollars by any % the next day, why would you ever want to spend it, and why would the seller ever want to accept it? The only reason fiat money works as a medium of exchange is that its value is relatively predictable day to day. Even with inflation, the price can reflect this. But when you could have inflation or deflation by any % from 0 to 50 in either direction, excuse me, how does it work? The answer, it doesn't. And Elon knows it. I wouldn't be surprised if, in a day or two, he liquidates the entire lot and tweets, "Oops guys, fat fingers, meant to buy $1.50 worth, sorry about the 7 extra zeros." And everyone else who bought high will be left holding the bag. All crypto is pyramid schemes. Bernie Madoff's got nothing on this one. However, once everybody buys into it, then, like the stock market, it becomes part of the system, at the core of the economy, and it's no longer in anybody's interest to see it go down except for the market makers out there with the inside knowledge to have the balls to short the market at all the right times. But that's another story that doesn't matter for the other 99%. Best bet, either speculate with the cash you wouldn't miss losing or stay out of the game. Can't understand the rationale why a coin that was created to replace currency is trading at this astronomical price, and so many investors will lose everything when it crashes, and there's nothing to claim or hold on to of value when it's just a computer-generated coin. There will be an epic crash in the future. Even if Bitcoin crashes though, it might only head back to 30K, 50K, 100K, after this bull run it's in. It depends on how this all pans out. What gives something value? If it provides a service to humanity. As worthless as I believe Bitcoin is, if it becomes a safe haven accepted currency by all to avoid centralized banking, it's definitely valuable. All currencies are worthless. It is just a matter of people agreeing on a common one to use. The government's reckless printing of US dollars, then giving it away for free, has driven people to find a new currency that the government can't manipulate and devalue. That's Bitcoin. Hate to say, but you'll see Bitcoin closer to $75,000 than $25,000. Again, it will be the best asset 11 years in a row. It has been for 10 years now. Have fun watching, don't be scared of big drops. Please like, share, leave me a comment, subscribe.